Good morning, everyone, and welcome to SB 1029, Year 3 of the Annual Debt Transparency Report, a webinar presented by the California Debt and Investment Advisory Commission. My name is Robert Berry, and I am the Deputy Executive Director here at CDAC. As the title indicates, this is our third reporting cycle for the Annual Debt Transparency Report. In the first year, there were just under 2,000 reportable issues. In year 2, we had nearly 5,200 reportable issues. This year, the number of reportable issues is in excess of 7,000. So needless to say, we have learned a lot about how our reporting system works, or doesn't work in some cases. We've learned a lot about the tendencies of filers given different debt types, and we've made some modifications and enhancements to the process along the way. As we've rolled out our changes, we've tried to keep you updated with notifications and revisions to the instructions, but we thought that it would be a good time, just before we get into the heart of the reporting season, to deliver a webinar that wraps up and reviews the modifications and the lessons learned over the last 2 reporting cycles. So we have quite a bit of ground to cover in the next hour and a half, but before we get started, I need to cover a few important items. If you're experiencing any technical problems, please contact GoToMeetings at 877-582-7011, or you can try their website at the address on the screen. The slides for today's presentation are available in PDF form in the handouts section of your webinar control panel. We encourage you to submit questions using the box marked questions near the bottom of your control panel. You may submit the questions at any time as they come to your mind. That may be the most convenient for you. Then we will take them up during our question and answer session toward the end of the program. If you would like access to live captioning during the program, click on the link in the chat section at the bottom of your control panel, or copy and paste the address on the screen into a second browser window. CDAC makes all of our webinars available on the CDAC website for replay. So in about 2 weeks, a replay and transcript of this webinar will be posted to the webpage dedicated to this program located on our education website page. So it might be helpful to go and review this in a couple of weeks, especially in the midst of the reporting process. Lastly, you may also notice from time to time that there's embedded links within the presentation that are intended to provide you with additional supplemental information. So it's important to note that the links are active in the PDF version of the presentation, accessible in the control panel on our webpage, or on our webpage, I should say. All of those, I believe all of the PDF links that are in the presentation link to documents also on our webpage in the filing section. So all those documents are there for you to review. So now let's go ahead and get started. Our presenters today are Usha Patel, who's the manager of CDAC's Data Collection and Analysis Unit, and Jeff Field, CDAC's lead analyst on the Annual Debt Transparency Report. So both Usha and Jeff have been with CDAC and working on the Annual Debt Transparency Report since the inception. Usha manages all of the technological changes and corrections that go through our IT process, and Jeff is literally the person that reviews all of your filings. So they're very experienced and the best people to run this program today. So let's begin. And Usha, I believe you're up first.
Okay, good morning, everybody. Today we are going to do a short recap of materials already available via the CDAC website to help you with the filings of the ADTR. Then we'll address a half a dozen or so of the most frequently asked questions by filers, those items that have been the source of difficulty over the past 2 years. Then we have a segment discussing the best practices and recommendations for filing reports for the debt issued under the Mark-Rules Local Bond Pooling Act. Before we get started into the meat of this program, we have a polling question. Have you filed an ADTR before? Please indicate whether you're familiar with the form, having filed multiple times, or if you've only filed once, or if you're new to this kind of reporting. I can see that 52 or more % of you have filed one or more.
Okay, so this looks like, this is Jeff, by the way. A lot of you probably recognize my voice from having phone conversations with me in the years past. But that's good. We have looks like about a third of the audience is, if you'll pardon the use of the term, newbies. We encourage those folks to consult the existing instructional materials that are already available on the website that Robert just outlined, in addition to what we're going to go over today. And then looks like a little over half have filed multiple reports already, and hopefully these, what we're going to go over today are going to be, will address a lot of the recurrent concerns. So I'll give it back to Usha.
Okay, so CDAC has conducted several webinars already, and these include step-by-step run-throughs of the form submission process, presented such that we can follow along as if you're looking over the shoulder of someone actually submitting the form. 2 of the webinars were conducted in 2017, and you can see the links that are shown here. Each of these are geared towards reporting of certain types of debt instruments. The first one focused on general obligation and revenue bonds, and the second focused on short-term debt, including commercial paper and also Melrose bonds. One thing we should mention is that between 2017 and 2018, changes were made to the section of the form dealing with how the debt is authorized. So if you look at either or both of 2017 webinars, you should also look at the third one listed here, which is Form 2018 and addresses the changes made to form, which resulted in the design you'll see when you log onto the form now. For each webinar, you'll be able to access the presentation, which consists essentially of the PowerPoint slides used, a video replay of the webinar as it was streamed live, and a written transcript. Some more things which are helpful are these recommended readings listed here. The first is called the Guidance on Complying with SB 1029. It gives a background on the law which implemented the filing requirements, and also gives detailed definition of the terms found on the form and a breakdown of its overall design and the aim. The second is called the Issuance Authorization, Enhancements and Data Submission Guidance, and it details the recent upgrades to the CDAC reporting and data collection process, which added the capability to track debt authorized as well as debt issued. It explains how that data is collected by showing what has been added to the CDAC reports of final sale as well as the ADTR, and it explains the intent of each new item on the form and how they work in concept. The third item is an article which ran in a recent issue of our deadline newsletter, Filing Tips for the ADTR, and it covers a lot of the same ground that we'll cover in this webinar today. And we want to emphasize again the complete step-by-step instructions for the filing the ADTR are posted on the CDAC website at the link you see here. As we've mentioned, the upcoming 2020 filing deadline will be the third one since the implementation of SB 1029. In the 2 years, we've seen about 50% compliance, meaning that out of all the issues of debt tracked by CDAC and deemed ADTR reportable, about 3,600 individual ADTRs have been filed. A lot of the reports have been filed by what we call third-party filers. These are financial service providers which are hired by the issuer to handle disclosing filing requirements, such as the ADTR, as well as other compliance and oversight needs. One of all the different types of issuing agencies, the most ADTRs were filed by or behalf of a K-12 school district. During the filing and data collection process, we got a lot of phone calls, a lot of emails. Overall, it's safe to say people had a lot of difficulty understanding the form, both in terms of how the form worked and the type of information that was required. Also, we realized there was a lot of misunderstanding about what SB 1029 required, as well as what it didn't, and it wasn't clear in every case who was responsible for the filings. I'm going to turn it over to Jeff for the next part of the presentation.
Thank you, Usha. A lot of you, like I said, probably recognize my voice from having spoken to me in years past, or more recently than that, regarding this very topic. Anyway, we're going to go over the ADTR FAQs, and these are some of the items which arose most frequently concerning the submittal of the ADTR. Let's look at the first one. What is the reporting period? There are several fields on the ADTR which refer to the reporting period. The reporting period is defined by statute by SB 1029 as from July 1st to June 30th inclusive. So it's basically the July through June fiscal year, which is common to most but not all public agencies. In case you're inclined to ask, well, why don't you just call it the fiscal year and not the reporting period? Well, the statute specifically says reporting period, so that's the terminology we like to use. Anyway, when you log on to file the report, you'll notice in the upper left of the form here where it says information as of reporting year end June 30th, and then it'll show a year, in this case 2019. So for this particular report where you see something, where you see this, if you were to see this at the top left of your form, the reporting period would be that July through June fiscal year, which ends on this date. One of the fields where we saw some misunderstanding or some misinterpretation was one which calls for debt authorized at the beginning of the reporting period. That's in section 2 of the form. In this example we have here, the year-end year displayed is 2019. So in that case, the beginning of the reporting period is July 1st of 2018. So in that particular line that I just mentioned, the beginning of the reporting period, July 1st, 2018, again, you would enter in an amount that was relevant, that was pertinent as of that date, as of July 1st of, again, in this case, 2018. The upcoming due date, the upcoming filing deadline is January 31st of 2020. And that is, again, going to cover the period inclusive 7/1/2018 through 6/30/2019. And the beginning of the reporting period, where such is called for on the form, is 7/1/2018. We should also mention here that if your situation is such that you have not filed in previous years, let's say you have an issue of debt that issued in fiscal 17-18 and you did not file for that period, the system will allow you to file back reports, so to speak. On the login screen, you're going to see, in addition to where you put your login information, that being your CDAC number and your ID number, you can also put a year-end year. So let's say you needed to file 2 reports because you realized you didn't file for 17-18. You would log in and file for 17-18 by entering 2018 on the login screen as opposed to 2019. And we should emphasize also that if you do this, please enter back reports, so to speak, in chronological order. In other words, if you need to file for 17-18 and 18-19, file 17-18 first, and then file 18-19. Problems will arise if you try to do it backwards, or if you don't do it in chronological order. Also here, let's discuss, I mentioned section 2, line D briefly on the last slide. This is another thing where we wanted to emphasize what the reporting period means. First-year filers in particular are going to need to pay attention here because that field will be, that line will be active on the form, meaning you're going to have to enter a value. And the important thing to remember there is if your authorization to issue happened in years prior to SB 1029 being implemented. If you have a voter authorization, a bond measure, let's say, that happened in a prior year, let's say 2012, and you've already had a couple of issuances pursuant to that authorization in years which predated SB 1029, you need to take those into account when you're entering the authorization at the beginning of the reporting period. So let's say if you're a school district who passed a $50 million bond authorization on a 2012 ballot, and then you subsequently issued $10 million in bonds in 2014 and in 2016, both of those are going to predate SB 1029. But then in 2018, you issued another $10 million bond on that same voter authorization, on that same bond measure. The amount you're going to enter in line D in section 2 then is $30 million because as of July 1st, 2018, after the 2014 and 2016 issues, you had $30 million remaining on that bond measure. So let's move on to the next topic. And that has to do with another question that came up a lot from filers. And that is, how do I report interest? And a lot of people notice that section 3 contains a line calling for accreted interest during the reporting period. Accreted interest refers to a very specific type of interest calculation, which only applies to a particular type of debt instrument, that being a capital appreciation bond, or CAB. Accreted interest is interest which is added to the principal amount of the CAB, usually once or twice a year. And it increases the amount of debt that must be repaid by the issuer. This is distinct from interest which is accrued, the interest that comes into play when bond proceeds are deposited and accrue interest by virtue of their being deposited in interest earning accounts. That's not what we're looking for in this section. We're only looking into this particular type of, only looking for this particular type of interest, which comes into play with this particular type of bond. So as succinctly as we can put it, if your issue is not a capital appreciation bond, enter 0 on this line. Here's another one. This is in section 5, which is the proceeds and expenditures section, kind of in the lower part of the form. The first one is the Add Fund button. You see it kind of floating out in space here on the left-hand side of the form. Don't ignore it. Now, it might sound odd, but what we found was, well, let me back up. This part of the form is where you create an itemized list, which breaks down how the proceeds of the debt issue were used. For example, in a general obligation or a revenue bond, the proceeds might be divided among a project or a construction fund or a cost of issuance fund and a reserve fund. But not everybody reported a breakdown like that, especially with refunding issues or maybe equipment leases in which you're likely to see all of the proceeds put in one fund, and the fund would be designated refunding or refunding escrow or acquisition in the case of an equipment lease. Anyway, you can see the screenshot here. I indicated the button before. What we found was that particularly in cases if they had only one fund, people simply wouldn't click the button after they entered their pertinent information over here. You know, they would select a fund category or type it themselves and then enter their amount, and then they thought they were done, particularly in those cases when there was only one application of funds. Like in the case of a refunding, they'd put, you know, instead of where it says other here, they'd select refunding or type deposit to escrow here, enter the whole amount of the debt issue, and figure they were done. And then when they went to try to submit their report, they'd get an error message because as far as the form was concerned, the proceeds weren't accounted for. So once you get done doing this, however many times you do it, make sure you click the Add Fund button, or else you're going to run into difficulties. Similarly, in section 5C, expenditure of proceeds, this is where you give the purpose for which the amounts in the various funds were spent. You see it's designed similarly. You're supposed to create an itemized list of the different purposes and amounts of expenditures, broken down by fund category. Anyway, similarly, there's a button, this time it's called Add Details. And the idea here is to, every time you enter an entry for an expenditure of funds, you click this Add Details button. And then you'll build a list. But what happened was we found, similarly to what I discussed in the last slide, if there was only one expenditure and or purpose, like in a refunding bond, where all of the proceeds were applied to defease a prior debt, it was easy to think, okay, there's only one thing to do here. I just put in my fund, my expenditure, and my amount, and then I'm done. What happened was we got several reports back where this section was blank because people didn't click Add Details under expenditure, under this expenditure section. So remember, once you enter all your information, click this, and then you'll see a new line show up in the bottom on the list. And then further on this kind of the same topic, this is a good time to go over this feature, which was similarly overlooked. The design of the form is such that you're really not supposed to duplicate expenditure purposes in successive years. In our example here, you have one of the items in their list of expenditures, cost of cap improvements. See, they kind of spelled it funny here. Anyway, you don't want to report, you don't want to create up here cost of cap improvements in successive years. You want to establish this purpose in 1 year and then update it in successive years. So the way you do that is you click this edit button here, or click the word where it says edit, this little link, you know. So if I have, you see here, they had cost of capital improvements in prior years, $2,300,000 and change. And let's say they wanted to say, okay, we've had this much for capital improvements expended in year 1 or in prior years, but we have more this year. How do we report that? Well, again, you click here where it says edit, and then once you click that, you see this kind of breakout box, line, whatever you want to call it, activates. And then you see here this dollar amount field is going to be activated on that line, and that's going to allow you to enter additional fund expenditure for this purpose, for cost of capital improvements for this year, for the current year. So you enter in a dollar value there. Then once you do that, you see here it says update. You click that after you enter your dollar amount. Then once you click update, you see your new expenditure is then added to your line item, and then it's retotaled. So you have now for your cost of capital improvements, you have what you spent in prior years plus what you spent this year, which gives you your total. So there's that. And what do we got next? Yes, beware of negativity. One of the things we saw on, I don't want to say a lot, but a significant number of reports were people entering amounts in Section 5, either under funds or under expenditures, where they had a negative dollar amount in the list of items. You see here they entered, the people figured out that you could enter a negative in this section, and the form would kind of allow you to do that. And so the idea behind their doing this was that they wanted to create a kind of credit as opposed to a debit, so that the total balance of a fund or the total amount of proceeds would actually increase as opposed to decrease. In this example, you see they entered, this says cost paid from interest. And this one says transfer from 2017 COPS. The idea was they wanted to show, as far as issuance cost goes for this particular issue, that the amount of issuance cost, the total amount of issuance costs for this issue exceeded the amount of the proceeds of the debt that were earmarked for issuance costs. In other words, they paid some of the issuance costs with proceeds of the debt issue itself, but they paid the balance of the costs with funds from other sources, with funds not not being proceeds of the debt. Another thing we saw, a couple more examples were, again, refunding issues. Oftentimes when you have a refunding issue, the bulk of the debt proceeds will go to defease the prior debt, but additional funds will also go, are also applied to the prior debt. And so in a lot of cases, they would put a negative amount and designate that to transfer from the prior reserve fund, because usually that's how refunding issues work. The reserve fund for the prior issue is applied to that debt, prior debt, when it is refunded. Also, they would report an interest dividend. This goes back to our discussion about accreted versus accrued interest. The ADTR is not designed, and the statute doesn't call for interest accrued by the deposit of fund proceeds. So that was another example there where it put a negative number. Anyway, to reiterate, the purpose of the ADTR the purpose of the ADTR is to satisfy what is required by SB 1029 only. It specifies that the proceeds of the debt sale only are what are to be reported on an ADTR. So in the cases of refunding issue, where funds in addition to debt proceeds go to refund prior debt, or in cases where interest is accrued by the deposit of bond proceeds into anything that can accrue interest, different kinds of U.S. securities, things like that, only report the use of the proceeds of the debt sale. In other words, don't worry about it if it's not meant to mirror, as it says here, it's not meant to mirror other financial disclosure documents. Don't try to put a negative number in there so that the ADTR, the standing balance that's shown on the ADTR, matches a standing balance that's reported elsewhere. And we should also mention that we've redesigned the ADTR, implemented a feature basically in 1819 going forward. It won't allow you to do that. But basically what we want to emphasize here is funds from other sources not to be reported. Accrued interest from the deposit of debt proceeds not to be reported. Okay. Another issue that has come up has to do with who specifically files the ADTR, who's obligated to file the ADTR, and this has come up most often with conduit revenue issues. These are issues in which a public agency, such as a city or a county or a JPA, acts as an issuing agent, and then loans the proceeds of the issue to a private obligor borrower, which is often a 501c3 organization. After SB 1029 was implemented, when we looked at the documents for conduit issues, we started seeing items in the loan agreement, like what we have in this example I've reprinted here, where you might say that the ADTR requirement is signed over to the borrowers. Basically, this says that the borrower agrees to file the ADTR, and they mention Section 8855K, subsection 1, which is SB 1029, and again says that it is the borrower's responsibility per this clause in the loan agreement to file the ADTR. However, issuer, well, 8855K says that the filing requirement, the ADTR filing requirement, lies with the issuer, and issuer is defined elsewhere in the CDAC regs, as we call it, which is Title IV, Division 9.6 of the California Code of Regulations, as the entity of state or local government that is legally authorized to enter into the contract through which the debt is created. An issuer retains the designation as such, even though it may serve as a legal conduit through which the rights to the use of the assets and the obligations for performance on the debt contract are assigned to a third-party obligor. So we understand the dilemma here. The borrowers are the ones in these cases who are most likely to have most, if not all, of the data related to the use of proceeds, in particular, the use of the project funds, such that are called for by the ADTR. However, again, by statute, the filing requirement does fall upon the conduit issuer, the conduit agent, not on the borrower. So in the first couple of years, we've been contacted by a lot of borrowers and by a lot of conduit issuers regarding the responsibility of filing for these issues. The borrowers in particular have had a lot of difficulty because they were unfamiliar with the financing terms as they're presented on the form. They couldn't figure out the form itself, or they'd never even heard of SB 1029 or CDAC before they received this instruction to file the report. In short, they didn't have the information they needed. So, this being the case, we do encourage the conduit issuers, the JPAs, the cities, the counties, to work with their borrowers and ensure that they have all the information, including and in addition to this information we're presenting here today, information they need to successfully complete the ADTR. How are we doing on questions?
We have a few, but we can hold them till the end.
You want to hold questions until the end? Okay.
Sure.
Well, I've talked a lot, so now I'm going to turn it back over to Usha.
Thank you, Jeff. Now let's talk a little bit about Marcos financing. First, let's look at the definition of debt. Our regulations clarify the definition of what types of transactions constitute debt as related to the requirements to file CDAC reports. As you can see, this is a detailed definition, but in essence, debt is defined as a contractual agreement which requires a public agency, the creditor, to make principal and interest payments over time. Debt includes the type of instruments that are typically involved in a Marcos transaction. When a joint power authority, JPA, or an authority issues debt under the Marcos Act, it creates at least two debt issues, one for authority issuer and one for each of the local obligors, which is the LOBs, whose project is being financed, all of which must be reported to CDAC and therefore subject to SB 1029 reporting. Authority issuers will receive a CDAC number and a password for each debt issued. Under Section 1, the General Information section of the ADTR, we have inserted a method for authority issuers to reduce the amount of total reportable proceeds that would have to be accounted for. Line G, proceeds used to acquire local obligations, should be used for authority issuers to show what portion of the proceeds were used to purchase the LOB debt, or fund a loan to a LOB, or enter into an installment purchase agreement. In other words, how much money would be used for the project. This is what Section 1 of the authority issue should look like. In this example, you see they start with the $3 million in total proceeds. If you see E plus F, comprised of $2,910,000 in principal and a $90,000 issue premium. In line G, they have entered in the $2,910,000 principal amount, indicating that the entire principal amount of the issue will be used to fund the project of the local district, which in this case is the Cartwright Wastewater District. By entering the amount used to fund the project in line G, the authority issuer will usually only have to make entries in Section 5B and 5C, that is the funds/expenditure or proceeds section on the initial ADTR. Going back to our example, you see that they were left only with the $90,000 issue premium on which they had to report. And as is often the case, that went to pay cost of issuance. So they reported that, and that left them with zero reportable proceeds remaining. Going forward, the LOB reports will be reporting on the use of proceeds for the fund. So here we see the LOB, or local obligor report, associated with the authority report we just looked at. The issuer here is the local district itself, not the JPA, which issued the bonds. You see they only have $2,910,000 in principal that we zeroed out on the authority report, showing as their total reportable proceeds. So here in the expenditure section, they report how their proceeds were used. And as you can see, they went to the local district project, which were being supported by the authority bond issuance. They reported expenditures for construction and acquisition sites. Okay, so we talked about this. Okay, so
Behind one.
well, I've already talked about slide 28.
Mm-hmm.
So if anybody has any questions.
Okay, we do have a few questions that have come in. So go ahead and, if you would, use your chat. The control panel at the right of your screen to ask your questions. So just a few questions. First, Jeff, there's a question from an issuer relative to filing what we call a back report, a report for a prior reporting period, and this filer had some problems relative to the system not accepting kind of the second report because they filed it one after the other. Can you explain that process?
I omitted that important detail. Thank you for asking that question. The database, the system which by which all this data is collected and kind of processed, is such that it updates or refreshes overnight. And since the ADTR form has this kind of year-to-year running totals functionality, basically, succinctly put, you can only file one report a day. So if you're doing, like Robert was talking about, filing back reports, back year reports, let's say you neglected to file your, or I shouldn't say neglected, let's say you discovered that a 17-18, fiscal 17-18 report needed to be filed. You would file that report on day one. And then you would, go ahead, file it, submit it, and then wait until the next morning, so that data that you submitted for the year one report, for the 17-18 report, can be entered, updated into the database such that it's ready for the year two report. So briefly put, file your year one report, wait a day, come back, file your year two report.
Okay. Then we have a question here relative to refundings. First of all, it's kind of a two-part question. Does the ADTR reporting requirement apply to refunding issues? And then secondly, if a filer had if they were reporting on an issue that was reportable under SB 1029, and it was a refunding issue of a issue prior to SB 1029. Let's say, for instance, they are reporting on a bond issued in 2019 that refunded a bond issued in 2007. What kind of information would they need to report relative to the bond in 2007?
They would simply need to report the amount of the 2019 proceeds that were applied to refunding the 2007 proceeds. They simply need to report the amount of the refunding proceeds that were applied to the debt which was being refunded. Beyond that, I'm sure a lot of you have noticed that the Section 5 of the form allows you to enter the CDAC number. If you have it, if you can find it, of the prior debt. That is not a required field. If you happen to know what that is, or you want to look it up somewhere, let's say on the Debt Watch website, and find it, you can enter that. Beyond that, you can, in the proceeds and expenditures section, where you go to enter the purpose of the refunding proceeds, people put things like refunding escrow deposit, DFES 2007 bonds, refunding escrow account, refund prior bonds, something like that. There's a space limitation in those fields, so anything that's brief like that is fine.
Okay, then we have another question, again, relative to refundings. Hopefully I can ask this well enough, Jeff, that you can address it. But I think this is a case where a bond is being refunded, or a debt is being refunded, and part of the proceeds that are applying to that refunding are from the debt issue that is subject to the report, the ADTR, and other outside funds. So in terms of reporting on the use of proceeds of the debt in which the ADTR is being filed, is there any priority given to the use of proceeds that are being listed? For instance, should they account for all of the cost of issuance on the bond that's being reported, or all of the refunding escrow, or does it matter? Is that at their discretion?
This kind of goes back to the section that we had about the negative numbers. The SB 1029 statute says that the proceeds of the debt sale only are what are to be reported on the ADTR. So in those cases where you have, let's say that you've issued a bond to refund $10 million in prior bonds. However, the escrow deposit of bond proceeds equals only $9 million. Well, the balance, the additional $1 million, is going to be funds from other sources. It's going to be either a prior reserve fund, or it's going to be cash on hand, or it's going to be something other than the proceeds of the SB 1029 reportable debt sale. Those you leave off the report, and you only report the $9 million escrow account. And it looks funny. At first glance, you might look at it and go, well, how are they paying off $10 million of debt with $9 million? How are they paying off $10 million worth of debt with $9 million? Well, that's what the statute calls for. That's what you put on the report.
Right. So you essentially just need to account for the proceeds of the issue that is being reported. As long as they're accounted for, then you're fine. So it's really at the discretion of the filer how they display that information, how that use of proceeds is accounted for.
If it's a degree of detail question, that's again, degree of detail is at the discretion of the filer.
Okay.
Most people simply report an escrow deposit, or perhaps multiple escrow deposits if one issue is going to refund multiple issues. But I don't know. I think they might be getting at how much is going to pay off prior interest and how much is going to pay off prior principal. You don't have to do that. You just need to show that the escrow deposit, the refunding, the amount of reportable proceeds being deposited into escrow such that it's applied to the prior debt, that amount, not funds from other sources.
So then another question along those lines in use of proceeds. Once proceeds are 100% expended, do we continue to file the SB 1029 until the principal is paid off?
That is correct. In many cases, you'll only be reporting, you'll only be filling out Section 5 for maybe the first 1, 2, maybe 3 years, maybe only 1 year if it's a current refunding. However, for the life of the bond, you're going to file the ADTR, but you're probably only going to report payments on principal in Section 3.
And if you've been filing all along, your data should be displayed cumulatively, and really that's the only piece of data that you are supplying on an annual basis is how much of that principal has been paid off.
Going forward, that's going to be that's going to be the case for many, if not most.
Okay, and then another question's come in. Would a conduit issuer include cities that have created agencies to issue bonds? Relative to your comments.
Yes. Let's take the city of Sacramento. They've created at least one JPA under Section 6500. The Sacramento Public Financing Authority, as distinct from the city of Sacramento, which did issue bonds. I guess in a larger sense, you could call that a conduit issuer. But going back to the section in the presentation about conduit issuers, borrowers, the relative filing responsibilities of each, we were really talking about deals in which a private entity solicits a loan via a public agency. In other words, the problems we were having with borrowers, being confused, not having the background needed to file, we didn't see those where you had, let's say, lease revenue bonds issued by a city's financing authority, where the borrower, so to speak, was another public agency. Specifically, we were talking in those cases about those deals where the borrower was a you know, for example, a 501c3, a private entity. I don't know if I answered that.
Yeah, I think so.
I mean, you know, yes, a city or a county can create a JPA, a financing authority, and issue bonds. You know, not every bond issue by a financing authority created by a city or a county or other agency is really what we were talking about in that section. The ones where we were running into problems were the ones where you had something like you know, we got a lot of calls from charter schools who receive these tax-exempt loans via JPAs, you know, non-government entities.
Mm-hmm. A question relative to accreted value. Is previously accreted value included in section 3A and 3C? That's references to the actual form.
Mm-hmm.
I think it's what the questioner is getting at is accreted interest accrued before the reporting period. So I think this might be a case where interest is accreted and those accretion dates kind of cross over the reporting period. How have filers handled that? Have they just made an estimate of the accretion that is accrued up to the end of the reporting period and then applied that, or have you run into that issue?
Yeah, I've looked into that, and in most cabs there are 2 accretion dates per year.
Like a coupon payment date.
Yes.
Yeah.
It seems like they were always in February and August. So let's say you had a cab and the accretion dates were in February and August. Well, you know, again, going back to what is the reporting period, you would report the amount of that accreted interest that was added to the principal on, let's see, so that would be, as of June 30th. So you would report the amounts of, you know what they might be getting at? Is it a running total? Is it going to keep track of, you know, in other words, let's say they had, $100,000 worth of accreted interest in year 1 that they reported. Is that going to roll over next year such that the principal amount will be updated?
Mm-hmm.
Yes. So let's say you have year 1 of your CAD, you have your original denominational amount that's going to pre-populate there in year 1. You're going to report your accreted interest in line 2, whatever it winds up being, and then you're going to get a total in line C of the initial denominational amount plus the accreted interest, and then that total. That line C total is going to carry over to year 2. So what's in line C in year 1 is then the next year, year 2, going to show up in line A. So that's the way the form's designed.
In case our questioner was asking about the accretion periods,
mm-hmm.
Can you finish the answer to that question?
Well, let's say there are 2. Let's say, again, if I recall, it seemed like
mm-hmm.
the accretion dates were always in February and August. So, an amount of, let's say if we're talking about the 18-19 reporting period, you would take the amount of accreted interest added to the principal on that August date, and then the amount added on that February date, the sum of the 2, and enter that in line B.
So there is an actual accretion calculation that can be made at the end of the period, reporting period for the 1029 form, even if it's in the middle of an accretion period for the debt that's subject to the report.
Well, yes.
Okay.
I mean, it's the amount that was added to the principal during the reporting period, during that July through June fiscal year.
But again, that number that you report, the accreted amount, will roll to the next reporting
Correct.
period. So you should
mm-hmm.
see your principal balance reflect what in the subsequent year of your ADTR report reflect what you had reported in the prior year. And that's generally the way the form is designed to work, that the data that you enter from year to year will accumulate to the current year report.
Correct.
All right.
Jeff, so once they establish the fund category for the first year, the next year they come around and they want to change something in the fund category, can they do that?
Well, if they want to change, if they want to add a new fund category, let's say they started a new project and they want to distinguish between projects, they would create, I'm sorry, you're talking about fund categories.
Initial fund categories.
Fund categories. Yes, the situation with the form is it's still designed such that you establish all of your fund categories. We're talking about Section 5B now, where you account for how all the proceeds are dispersed, how they're all allocated at time of issue. You are basically locked into the funds that you create in year one. We realize there are cases in which in subsequent years you would need to change that, update that for any of a number of reasons. If that's the case, you should contact us and we can take care of that on our end.
Well, it looks like that's all of the questions that have come in. I realize that we have kind of gone through this quickly, and if you're a new filer, clearly there's a lot of information that we didn't cover about the real basic elements of filing a report. So I would invite you to go to our website and review the instructions and the variety of notifications and pieces that we have put out talking about filing your ADTR. Those were the references that Usha mentioned in the earlier part of the program, and are linked to the PDF portion of the or the PDF version of this webinar, of the webinar slides. So also, if you're experiencing problems, So if you're experiencing problems or have questions that we didn't answer today, our contact information is on the screen here, so we invite you to give us a call. Don't hesitate to use it. And as mentioned earlier, CDAC makes all of our webinars available on the CDAC website for replay. And if you'd like to review this webinar in about 2 weeks, a replay and a transcript of this webcast will be posted to our education page on the CDAC website. I would say, as far as the CDAC contacts go, Jeff is the go-to person with respect to the real details of the ADTR, but feel free to give any of us on the contact screen a call if you run into problems. We're happy to help. So that's bringing us to the end of our webcast, a little earlier than we had thought, so hopefully that's good for folks' schedules today. Lastly, before we close out, a quick reminder about upcoming CDAC programming. We have 3 programs upcoming on surplus funds investing. So for those of you that wear multiple hats and are involved in surplus funds investing, a hands-on workshop on the 19th and 20th of this month in a couple of weeks, a webinar on socially responsible investing on December 10th, and our advanced investing topics program, which will be in Southern California, January 15th and the 16th. And then on the debt issuance side of our work here, we have a disclosure program on March 3rd in Irvine. So registration for all the programming is open, so please visit our website and register if you are interested in participating in any of our programming. Also, you can stay abreast of all our educational programs by subscribing to CDAC's listserv on the CDAC website, or by following CDAC on Twitter and LinkedIn. We use social media to let people know about our upcoming programs as well. So in closing, I'd like to thank our presenters today, Usha Patel, Jeff Field, and Angela Ayala from our education team, who's provided all our technical support behind the scenes here for this program. And of course, thank you to all of you for joining us this morning, and we look forward to you joining us for future CDAC programming. So long and have a great day.